Welcome back, and thank you very much for staying with us. Time now to check what happened in the markets today. Gold edged off an early two-week low today as cautious traders awaited further developments in the trade negotiations between the US and China. Though a firm equities market kept a lead on bullion's gains, spot gold was up 0.2% at $1,457 an ounce. In the process, the oil price rose on hopes of progress towards a trade agreement. So let's take a look at some of the developments in the market, and we're joined here in the studio by Henry Biddlecombe, who is from Anchor Capital. Thank you very much for coming.
Pleasure.
Right, tracking the markets from yesterday, was just a downturn, especially with the financial services sector being in the red. What did you make out of yesterday's close and today's opening, and how the markets have been progressing so far?
Yes, you've got to remember that intraday movements really reflect just a lot of noise, and you can't read too much into them. But if we look at the bank stocks specifically, they actually are looking quite cheap. Because they're really seen as a proxy for sentiment towards the country. And for example, you've got ABSA trading on a forward P of 7.5. You've got Nedbank trading on a forward P of around 8 times earnings. These are very cheap ratings for bank stocks. So sentiment towards the country at this point is quite poor, financially speaking.
Right. So the Reserve Bank has announced that the business cycle has gone down by 0.6%. What does this mean for the overall economy, more so that we're going towards the end of the year? Would anything help in as far as the investments that have been pledged kicking in? Would that maybe have an uptick?
Yeah, so I mean, we talk about leading indicators, but what is a leading indicator? Well, basically, in this particular instance, it's how many new jobs are advertised, how many new vehicles are sold, how many new building plans are passed, and how many new manufacturing orders are placed. So it's a good leading indicator for economic activity, and it's been negative for around 11 months now. But it's a reflection of where the economy's at, Colin. And really, at the moment, there's a lack of confidence, and that's manifesting as a sort of a capital formation vacuum. People aren't investing. They're not starting new businesses, they're not building new homes, and they're not buying new cars. And I think what investors are really looking for is evidence of an agenda of reform at government level. And once we see that coming through, confidence will return and investment will return.
So what's your hope regarding the numbers that may go up in as far as consumer confidence is concerned, given that we're getting into Black Friday and the festive season coming?
Yeah, so you've hit the nail on the head. You want to see those confidence numbers ticking up, because that causes an uptick in consumer spending, and it's a little bit of a spiral. Once people start to spend more, more economic growth starts to come through. That bolsters confidence. When confidence ticks up, then people start to invest again.
Mm-hmm. Now, another corporate scandal. This collusion between CompuTicket and ShopRite regarding exclusivity of selling tickets. I mean, what do you make out of this in as far as integrity and honesty is concerned, in as far as the business environment is concerned in South Africa? Because the term corruption won't ever be used when we have incidents like this. You will have some sugar-coated analysis.
Yeah, it's a difficult situation because CompuTicket have a fairly dominant position in the market. I mean, that's kind of the nature of the market and the way it's evolved, right? So it's a tricky situation for them to manage in conjunction with the Competition Commission. But why this scenario is particularly interesting is the Competition Commission is now seeking to hold ShopRite jointly and severally liable along with CompuTicket. And that means that they can levy a much bigger fine, because ShopRite obviously turn around 150 billion rand a year. So a 10% fine on turnover would be 15 billion rand, which incidentally is the number that they're talking about.
So let me just pick your brain before you go. Are the markets being held at ransom in as far as the US-China trade talks? I mean, like, a deal looks like it won't even be reached before the end of the year. However, there are people who are saying they are optimistic that it may happen. Yeah,
look, I mean, it's been ebbing between optimism and pessimism, hasn't it? I mean, you've been watching it with me for the last few months. And of course, whatever seems to be happening on that front will drive markets on the day. It does seem like we're closer to a resolution now than we have been before. But actually, Colin, I think that this trade dispute between the US and China is a multi-year dispute. And this is going to play out over a number of years. And really, it's America trying to crack open the closed Chinese economy. But whatever's happening on the day is going to have a massive influence on the market because, of course, the ramifications of a trade dispute are huge for global equity markets.
All right. There's so much to talk about in as far as global developments are concerned, but we'll keep on tracking the markets and bring you back in the studio so that we can have more analysis on that. All right.
Always a pleasure.
All right. Thank you very much for making time.
Sure.
Right, Henry Biddlecombe is from Anchor Capital, giving us an analysis of the developments in what's happening in the markets. In other news,